You've likely heard the term VWAP used by traders and chartists. This refers to a moving average indicator called the volume-weighted average price. The VWAP is displayed as a moving average line on a chart. The line is a moving average that tracks the price value traded over the total volume, usually on an intraday chart. The VWAP indicator is significant for the purposes of its use. It provides a context of the price trend depending on where the stock is trading in relation to the VWAP line. A stock trading above the VWAP as the line rises, indicates an uptrend and, vice versa on a downtrend. There are many different strategies with this indicator, but the one we're about to teach you in this video is probably the best one out there. This strategy is called Fade to VWAP. Besides the VWAP, it includes two free trading view indicators that tell you when exactly you should buy and sell. This makes it a lot easier for beginners to eliminate emotions and trade like a pro. We will add these indicators one by one and explain how they work and how to take maximum advantage of them. You will also learn how to set alerts for this strategy. This way you will save yourself a lot of time. Okay, without further ado, let's install the first indicator to the chart. Simply click on the Indicators tab and type in Volume Weighted Average Price. Select this indicator that you can see under Technicals. This tool consists of three bands, the middle, upper and lower bands. In most cases, when the market is trading inside the bands, it indicates a range. For our strategy, the most optimal place to enter the market is when the price is above or below the bands. A lot of traders don't know that VWAP can also act as a magnet for future price movements. Notice that when the market is overbought, the price is typically above the VWAP bands. This indicates an overextension and a natural price decline in the future. The same is true when the market is oversold. As sellers see that the momentum is over, they start taking profits, which results in an increase in price. So where do you think is the best place to buy? Your answer is correct, below VWAP. However, there is a major problem. How can we make sure that we're buying or selling at the change of the price's momentum? You see, timing is everything. You should not take trades without confirmation of a trend change. So in order to make sure that we enter the market at the right time, we need to apply the next indicator to the chart. This tool is called the Turtle Trade Channel Indicator. Make sure you select this one by Keyvanch Ozbilgic. The following step will be to adjust the settings of this indicator just like we're doing right now. Once you've finished setting up the indicator, the chart should look like this. The labels you see above and below the price will be your buy and sell signals. The final step will be to add the third confirmation. So access the Indicators menu one more time and search for WADA Adder Explosion. Enable this indicator by Xi'an KM. In the Style section, uncheck some of the options. Now let's move on to the exact rules of this strategy. For the signal to buy to be valid, three conditions must be in place. First, price action must be positioned below the VWAP bands. This means that the candlestick bar should be closed below the lower VWAP band. Second, the first confirmation indicator must print a long entry label. Third, at the time the signal is issued, a green bar must be present on the WADA Adder Explosion indicator. It also needs to break above the explosion white line. Once these conditions are met, a buy order should be placed at the open price of the next candlestick. Stop loss is set below the recent swing. Target at least 2 times the risk for this strategy. For sell entries, do the opposite. First, wait for the price to break above the VWAP bands. Second, while the price stays above the upper band, the indicator must print a signal to sell. Third, at the time the signal is issued, the WADA adder indicator must be red. The bar also needs to break above the white explosion line. When these rules are met, a sell order is placed at the open of the next candlestick. Stop loss is positioned at the recent swing high. The profit target stays the same as for long trades. Traders, I hope you have understood the rules. Let's now take a look at how many successful trades we can find on Ethereum on the 5-minute time frame. You can see for yourself that the strategy is almost never wrong. Now let's test this strategy on the Forex market. It is amazing how accurate the strategy is. No losses so far. Traders, don't forget to leave a like button for this video if you enjoyed it. Also subscribe to our channel for more high win ratio strategies. Okay, now let us show you how to set trade alerts for this strategy. First, click on alerts and enable the Tutsi indicator. The next step will be to select the long entry. The trigger should be set as once per bar close. Then click Create. You just created an alert for a long signal. You can also create alerts for sell signals as well. You will get notified every time the indicator prints buy or sell labels. You need to check if the rest of the conditions are met before placing an order. Thanks for watching and see you in the next video.